18 Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Start of another day, and doesn't look like it's going to be a good start given what the SGX Nifty is suggesting.
Yeah, but you know, and the inflation numbers last night did not cause an earthquake, right?
Yeah.
I mean, barely a flutter, actually. And it's at least looking at the way US markets closed, not very much.
Yeah. I think there were two numbers. One was the expected number, and one was the buzz that was there in the lead up to the announcement. You know,
thankfully, the buzz was that it'll be hot.
It'll be very, very hot. So it was hot, but it wasn't ekdam garam.
Absolutely.
Wasn't burning hot.
Burning.
You know, so let's just start with that, really, in terms of, you know, the setup this morning, in terms of what you should pay attention to. So inflation is coming off. I think, you know, let's just, before we get into the, you know, 0.4, 0.5 month on month, 6.5, 6.4 year on year, the message is that inflation data threw up hopeful signs. That inflation in the US is moderating. There is absolutely no two ways about it. So we are no longer at, you know, between 6 and 8% inflation, which was the norm in 2022. Looks like 2023 is more like between 4 and 6%, will be between 4 and 6%, the way things are going. But the overall numbers, right? I mean, if you remove the cover, under the hood, there are still signs that, you know, some components of inflation which are important in the US are still being very sticky. You look at owner's equivalent rent, which is a large weighted sort of component within the CPI number. You look at services inflation. Goods inflation, of course, has come off quite a bit, but services is more sticky always. That is still kind of looking, you know, sticky and high and strong. So many are kind of looking at this number and saying, well, okay, it's coming off, but the fact is that, you know, it's slow. The process itself is slow. The disinflation process is slow, and it's challenged by very sticky prices here and there. So it's not a one-way clean slide, as some would have hoped for, as most would have hoped for, that this problem is behind us. It perhaps will be with us, but it's going in the right direction. The disinflation process is on, although it's a bit slow. You had Fed officials coming through, right? I mean, at least 4 of them who came and spoke after the CPI number. So we have a real-time sense of what the Fed sort of makes of this number. All of them kind of made the simple point that more rate hikes are necessary and interest rates need to be held higher for longer in the US to bring this under control for once and for all and not leave the job half done. So that's point number 2. What was the market reaction? US yields were higher. You had, I mean, the 10-year, for example, went up, the 5-year was up, 2-year was up. But equities and the dollar both were absolutely flat, notwithstanding NASDAQ's move up of about 0.6%. So it's a bit of a confusing kind of picture, not very clear. Later in the US, we get the the retail sales, monthly retail sales number, and that should tell us a little bit about the health of the US consumer. This is also going to be important, but the CPI was the big one, which has kind of left us, I would say, in a bit of a inconclusive kind of a zone. All right. The Nifty, just to come to markets and levels here, Nifty seems poised finally to break out of the range. We've kind of treaded water within the budget day high and low range for some time now, and it looks like we perhaps could break out. So a close above, we got very close to this level, 17,960. It's nothing but, you know, there's a rising channel starting from the 3rd of February, right after the budget. It's got a couple of touch points since then. And the upper end of this rising small channel is 17,960. A solid close above it, I think, opens up bullish hopes from here on. And day before yesterday's low on the Nifty was 17,720. I mean, if you want this up move to sustain, that level should not be broken on the downside. Bank Nifty took out the 20-day moving average finally yesterday. And now I think the 40-day exponential comes into focus. That stands at 41,864, which is the important number. And again, for the Bank Nifty, one hopes that Monday's low of 41,158 should hold on the downside. Those are, you know, some resistance and support levels to watch out for. But broadly for the index, you know, a solid close above, the Nifty, that is, a solid close above 17,960 perhaps, will make it more plausible that the market is breaking out of this range and perhaps heading 18,000 plus kind of levels. Sonia.
Absolutely. And, there is a case being made that this perhaps could be the final leg of the inflation battle in the US, right? I mean, it's eased for 7 straight months now in the US, the inflation number, although it is still, not as per the RBI, the Fed's comfort zone. The Fed's target rate of 2%, US inflation continues to be above that. But there is a case being made perhaps for A, the Nifty to break out above the range, and B, for this being the final leg of the battle against inflation. So in that context, it's positive for the bulls. The other positive thing is that it's the 3rd consecutive day of buying from foreign investors. So both FIs and DIs bought in the cash markets yesterday. FIs bought about 1,300 crores, DIs bought about 204 crores. So these are 2 reasons why perhaps you could, see the market buy the dips. Of course, this morning, the SGX Nifty is indicating that the start will be in the red, but I won't be surprised to see the market gravitate towards the upper end of that range. The levels, the 100 DMA, 17,950 thereabouts is something that the Nifty is approaching. Let's see if we can break out above that. For now, the odds are stacked in favor of the bulls, but let's see which way it goes. A lot of the numbers that came in, of course, we are at the faggest end of the earnings season, just, last 1 or 2 days. It was a weak quarter from a lot of the names that reported yesterday. Bata, Apollo Hospitals, ONGC. Some strong numbers came through as well. We talk about that as well. But some more numbers left, the likes of Nestle. So from the consumption basket, we'll watch out for that. But all in all, you'd have to say, although the handover from the global markets was a bit weak, the Dow was under pressure, SGX Nifty is down. But the internals suggest that perhaps we could break out above that range. Yesterday was a good day as well for the Nifty. So let's see if today the dips get bought.
Well, that's right. And I've been making this point that the FIs being net short in the index is not such a bad thing. And it appears the FIs have turned the corner, at least in the near term. As Sonia mentioned, they have been buying for the last 3 sessions, which is wonderful. Also, the F&O market, the cues are quite encouraging, which we'll get to just a bit. So have the FIs turned the corner? The Nifty IT index could outperform yesterday. Again, we pointed that out yesterday. The NASDAQ again had recovered big time from the low point of the day. So could it move in sync yet again? I think that is a possibility. And also, if the Nifty holds its ground, then maybe the broader markets can fire as well. Yes, it was a little bit disappointing that the broader markets that were still under pressure, the mid-cap index as well was a relative underperformer. Moving to the cues coming from the F&O market, well, there was good amount of institutional buying number that we saw yesterday. But in the F&O market, there was clearly a short covering bounce that played out, both on the Nifty Bank as well as on the Nifty. What did the FIs do in the F&O market? Well, they got stumped on the wrong side. They covered closer on 34,000 short contracts and they added closer on 7,000 longs. That's a swing factor of around 41,000 contracts. So from having closer on 80 to 83% of their positioning on the short side, that's come down to around 73%. They continue to remain net short on the markets, and that could provide us that much needed boost or that much needed tailwind as well. For me, the most encouraging aspect was they covered shorts and also they wrote puts yesterday. And earlier they were writing calls ad nauseam. Yesterday, in fact, some of those calls, well, they were unwound. So let's pull up a couple of active strikes yesterday. The PCR has moved up to around 1.1 odd, and the calls that were written earlier, they got unwound. And there was put writing, 17,700, 17,800, 17,900 put. They saw a fair bit of writing out there, which brings us to the level. Since the 17,900 put was getting written, well, the 17,830, that becomes a crucial support zone. So that's 100 points lower from yesterday's close. While we expect to see some bit of resistance at around that 18,000 odd mark, the Nifty Bank essay closed beautifully. 20 DMA and 100 DMA, both of them, very close to those levels. So can it move towards the 50 DMA? That's going to be very, very important for the Nifty's up move. And the near term, I'm looking at support at around 41,200 odd because we did see a bit of a bounce from there. SGX Nifty suggesting a downtick. That's not a bad thing. It gives the bulls an entry opportunity. 17,830, the crucial mark on the downside for me.
All right, Nigel, so that's interesting levels and cues to watch out for. Thanks for that. Before we start, let me quickly run you through what's lined up in the first half hour of the show today. We will get you updates from markets across the globe. Matt Orton of Raymond James Investment Management will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks to watch for the day. And at 8:30 this morning, Nishal Maheshwari of Centrum Broking will make an appearance and we'll talk markets, levels, stocks with him in a bit.
All right, so we have lots coming up on the show in the next 2.5 hours, but without wasting any time, let's kickstart and tell you about our first view of the day coming in from Gautam Dugar of Motilal Oswal Financial Services. He expects the markets to remain in a range and react to earnings, inflation and global cues. Among sectors, he likes autos, BFSI, IT and select consumption stocks, while banks are looking quite attractive now. His stock-specific preferred ideas include ICICI Bank, Axis Bank, SBI, ITC, Infosys, Titan, M&M and Maruti. So that's the list he likes, while he is avoiding new age tech companies and Adani Group stocks at the moment.
Well, let's get you some money market views as well. Kunal Sudani of Shinhan Bank says the US dollar traces yields to rebound despite softer US inflation data. He says hawkish Fed talks are the key, and Fed funds futures are pricing in rate rises in March and May. According to him, the dollar index finds resistance at 104.1 levels, and all eyes now remain on US retail sales data due today. For the dollar INR pair, Kunal says 82.6 to a dollar acts as a support, while 83 to 83.1 to a dollar is a resistance.
Okay, and on the bonds, Ajay Magnolia of JM Financial says disappointed with US inflation print at 6.4%. US yields have hardened by 8 to 10 basis points. He says traders may remain cautious as more rate hike fears have resurfaced now. He expects the old 10-year benchmark bond yield to trade in a range of 7.37 to 7.43%, while the new one may trade in a narrow range of 7.36 to 7.41% for the day.
Well, it's the final day of earnings, so plenty of results to track, and we'll get to those stocks in just a bit in our special Top 10 segment. We're looking at Siemens, NMDC, Biocon, PI Industries, and Torrent Power. They are stocks on the back of positive news flow. On the flip side, we have Apollo Hospitals, ONGC, Bata, Radico Khaitan, as well as GMR Airports. They are stocks that could potentially react to negative news flow.
Okay, Matt Orton is now joining us. He's Chief Market Strategist